Two Americans start with exactly the same amount of money. One buys real estate. The other buys stocks. 30 years later, one enjoys financial freedom. The other wishes they had made a different decision. So, which investment actually creates more wealth? Real estate or stocks? For generations, owning a home has been part of the American dream. A house represents security, stability, and success. Many families built enormous wealth simply by buying property and holding it for decades. A modest home purchased years ago can be worth several times its original value today. But real estate offers something even more powerful: leverage. With a relatively small down payment, investors can control valuable assets worth hundreds of thousands of dollars. If property prices rise, gains can be significant. However, ownership comes with responsibilities. Property taxes never stop. Insurance costs continue rising. Repairs are inevitable. Roofs fail. Pipes burst. And unexpected expenses can quickly reduce profits. Real estate can build wealth, but it demands time, effort, and patience. Now let's look at stocks. When you buy stocks, you're buying ownership in real businesses. Businesses that innovate, grow, and generate profits every day. The greatest advantage of stocks is compound growth. Imagine investing a fixed amount every month. You stay consistent. You ignore the noise. You avoid panic. Over time, your returns begin generating even more returns. And eventually, time becomes your greatest financial asset. Unlike real estate, stocks require almost no maintenance. No tenants. No repair bills. No late-night emergencies. Your investments continue working while you sleep. But stocks have a challenge of their own. Human emotions. Fear causes people to sell during crashes. Greed pushes people to buy at market highs. And impatience destroys long-term plans. The biggest threat to investors isn't the market. It's often themselves. Let's compare two investors. Sarah chooses real estate. Michael chooses stocks. Both start with $100,000. Sarah purchases a rental property using leverage. Her tenants help pay the mortgage. Property values increase over time, and rental income creates additional cash flow. Michael invests in a low-cost index fund. He avoids market timing. He stays invested and allows compounding to do the heavy lifting. Both strategies can create incredible wealth, but they reward different personalities. Real estate rewards action. Stocks reward patience. One requires involvement. The other requires discipline. Every investment carries hidden costs. Real estate investors face maintenance, vacancies, taxes, insurance, and legal challenges. One major repair can erase an entire year's profits. Meanwhile, stock investors battle emotions. Buying high, selling low, chasing trends, and abandoning their plans when markets become volatile. In both cases, behavior matters more than intelligence. Patience matters more than predictions. Consistency matters more than timing. Here's something fascinating. Most wealthy people don't choose between real estate and stocks. They use both. Stocks provide diversification, liquidity, and long-term growth. Real estate provides leverage, cash flow, and tax advantages. Together, they create balance. When one asset struggles, another may continue growing. This reduces risk and builds resilience. True wealth is rarely built on a single foundation. So, which investment wins? The honest answer is simple. It depends on you. If you enjoy managing properties and creating cash flow, real estate may be the right path. If you prefer passive investing and long-term simplicity, stocks may be a better fit. Neither guarantees success. Neither guarantees failure. What matters most is consistency, because wealth isn't built overnight. It's built slowly, one decision at a time. Time, not timing, is what creates millionaires. The people who achieve financial freedom aren't always the smartest. They're simply the ones who remain committed long enough for compounding to work. And perhaps the greatest lesson is this: you don't have to choose only one side. Real estate and stocks are not enemies. Together, they can become powerful tools for building generational wealth. The ultimate goal isn't winning an argument. The ultimate goal is freedom. Freedom to spend time with family, freedom to pursue meaningful work, and freedom to live life on your own terms. Because money isn't just about numbers. It's about options. It's about security. And most importantly, It's about freedom. Thanks for watching. And remember, the best investment strategy is the one you can follow consistently for decades.